Palantir stock, absolutely incredible this stock is. It is getting close to $40 a share now at this point in time. I posted this on X 44 minutes ago. That was when the stock wasn't even quite as high as it is now. The stock's up almost 5% here today, pushing close to $40 now. Absolutely incredible. So I thought we'd just talk about this at the top of this video and kind of talk about, am I planning on selling my Palantir shares? Why or why not? Or at least a portion of them, right? Given that everybody's talking about valuation. So we'll speak about that here at the top of this video because I do think it's worth addressing given that this stock is climbing, man. It is just relentlessly going up. And it's not even a good day in the market. That's the best part about this. Palantir's up almost 5%. This is not a good day in the market. Nasdaq's red, S&P 500's red, Dow's red, and the Russell 2000's red. Everything's red across the board, and Palantir's like, what's going on? I don't know. I'm going up. That's all I know. Holy smokes, okay? Then I want to react to a few new numbers that came out here today. Jobless claims rose more than forecast last week, so looking forward to reacting to that one. September ISM Services beat expectations. I'm looking forward to reacting to that one. Calls a day. Tesla, my asshole, is having a really tough day. That might be my worst stock today, or one of my worst stocks. It's down over 3% plus here today. So we'll speak about Tesla for a moment. Services sectors propel economy for a soft landing, says this gentleman from Wells Fargo. Looking forward to reacting to that one. And then last reaction here is this one, the brands that could be hit hardest by port strike. So obviously that's ongoing right now. So I want to hear about the sorts of companies and brands that might be hit the hardest in regards to the situation. So appreciate y'all joining me as always. Thank you so much for being here. If you're making any money on Palantir stock out there, let me know in the comment section how much you are up on your Palantir position. If anybody wants to share it in the comment section. I'd love to hear from you guys. Absolutely incredible. But by the way, thank you for being subscribed to the channel. Appreciate y'all being here. Pin comment down there today. I'll put my private stock group as well as 1000xstocks.com if you're looking for access to all that. I'll put that as a pin comment down there here today, okay? Alrighty, so Palantir, am I planning on selling any Palantir shares? I'm taking some profits here. Well, first off, my position sizing in regards to Palantir, it's not like it's a crazy size position. It's $200-something thousand, right? Which is a good size position, but it's not like it's some crazy overweight position like a Meta, which Meta's position sizing in the public account now is around $1 million for reference, right? So it's not like it's that crazy big of a position for me. Now, do I like the valuations it's trading at? No, of course not. I don't like it on a trailing 12-month P basis. I don't like it on a forward P basis. No, but with that being said, I can't really cash any Palantir right now. And the reason being is we're in a weird situation with Palantir right now. And we're in a situation where its revenue growth continues to accelerate and accelerate quarter after quarter after quarter. As of right now, I can't tell you where the top is for Palantir's revenue growth. Maybe last quarter was it, or maybe this quarter they hit like a 30% number, right? If they start getting over the 30% number, you can't sell the stock yet, right? And then what happens if, let's say, they get to 30% this quarter? Let's just say hypothetically they report 30%, which no one's really expecting. That would be actually kind of surprising. Let's say they do it though, right? They go from 27% growth last quarter to then 30%. All right. Then the question begins, okay, what about next quarter? Do they accelerate again to 32%, 34%? Like, we just don't know where the top is for revenue growth percent right now. And for that reason, I can't say I can cash shares right now because I don't know where the top is. If this is a different story. I mean, if Palantir tops at revenue growth at, whatever it was last quarter and then it just starts going down, I think it could make sense to maybe potentially cash some Palantir shares here, right? At least a portion of the shares. But if we're talking about a company that could get back to 30% revenue growth or more than that, you can't cash the shares yet, right? And so that's where I look at with Palantir, and I'm like, I'm not ready to cash any shares because at the end of the day, this could be a rocket ship ride to 50 plus before you know it, especially if they start growing revenue 30% plus, because that completely changed the trajectory of the company at that point in time. Because basically everybody's given up on the 30% revenue growth. Karp used to talk about that. Alex Karp used to talk about, we're going to grow 30% plus on average a year for many years to go in the future, right? Then 2022 hit, and that all went away. And now we've been working our way real close. Last quarter, 27%. We're working our way real close back to that 30%. If we go 30% plus, game changer. And so next thing you know, if that happens, you'll see Palantir 50 plus. And so that's why I don't want to cash this stock right now because we're at too confusing of a state in regards to the growth. It's just about how much do they grow, right? Which is absolutely beautiful. And obviously S&P 500 inclusion has been huge for this company. Now it's obviously in the S&P 500 now. The buying has obviously been going on in regards to Palantir. And that's a lot of fun there. Next one up here, jobless claims rose more than forecast last week.
Standing by at the CME in Chicago. What was it last time, Rick? What are you expecting?
Well, we're expecting that continuing claims remain above 1.8 million. We're getting ever closer to 200,000 on initial claims. And even 1.8 million, as Steve points out quite accurately, historically, we've had levels significantly higher. So these are quite well behaved and really argue against any significant velocity to rate cuts. Here we go. The data should be hitting the wires momentarily. Joe, we're expecting a number around 221,000. It's a bit higher. Initial claims, 225,000. Slightly revised last week from 218 to 219,000. And believe it or not, as well behaved as 225,000 is, it is the second highest of the month. It compares to the first week where we're at 231,000. And we do see
Okay, so what does this mean for the Federal Reserve if they're just looking at this data point? If they're just looking at this data point, that gives them more reason to cut 50. It gives them more reason to cut 50 basis points come next meeting in November. Hearing jobless claims being a little worse than expected. This is not some off-the-cliff situation, right? I would call it slightly worse than expected, and it's very, very slight revision on last month, 218 to 219.
17 consecutive weeks above 1.8 million in continuing claims. Pretty darn close to expectations. 1,826,000. Subtle revision in the rearview mirror to last week. And we see that yields are largely unaffected by these numbers. Listen, whether you're looking at JOLTS, which improved, and even the chairman was quite well spoken at his last Q&A, pointing out that overall, the economy's pretty solid and the labor market may be slowing, but it's certainly not slow. And they're going to do their best to hold the economy in a solid place. I understand all that. We could question the easing. It's not about what we want the Fed to do. It's about what the Fed will do. We still have a litany of economic releases to go today. And of course, we're going to start to see some better metrics on the service side. But in front of tomorrow's big jobs report and in the rearview mirror ADP, it certainly looks like the game is going to be about yields to the upside. We've gone from a 2-year low yield close in twos to now a 4-week high should we close where we're currently trading right around 365. And if you look at 10s, they're hovering around 380. That's up a couple on the session. If they were to close here, it would be exactly a 1-month high yield close. And that's after coming off of a 15-month low yield close. So things have turned. The dollar index has been a tough one, Joe. A lot of my trading buddies have had a lot of stops triggered. My technicals really looked last week for that close under 100.5 to have some follow through. Be very careful here. It's better to have small losses on the dollar index without any clear violation of 100. All other abilities to be short are just kind of getting in a bit too early.
All right, next one up here. September ISM Services beat expectations.
To Rick Santelli. Hey, Rick.
Yes, let's start with the ones most likely making us move higher. If we look at ISM Services for the month of September, we're expecting a number around 51.7. Our last look was 51.5. Zoom, 54.9. 54.9. That's the best since February of last year when it was 55.0. Now, if we look...
So this... On the flip side, if the Fed was looking at this, they might say, okay, we only need to lower by 25 basis points in November, right?
Look at the prices paid index. We're expecting a number around 56. This one moving the wrong way, which also can help explain why interest rates are moving up. 59.4. That's the biggest, the worst, the biggest jump in prices paid since the very beginning of the year, January, when it was 64.
So that right there, that would make the Fed say, we're not even going to lower rates in November.
We look at employment in front of tomorrow's jobs report. Bit on the weak side, 48.1, sequentially following 50.2. And once again, we revert back under 50 where we were in June. Finally, on the new orders front, this one's a strong one, 59.4. 59.4 is the best also since February of last year, as the headline number was. That most likely grouping is accounting for the pop in yields. Now let's go through factory orders. Expected up 1/10, comes in at down 2/10. Last month slightly revised from 5 to 4.9%. Ex-transportation still remains weak, down 1/10. If we look at durable good orders, these are all final reads, replacing mid-month reads. Unchanged, remains at unchanged. Ex-transportation remains up 0.5%. Capital good orders, non-defense ex-air, a proxy for capital spending, improves by 1/10 to up 0.3, and that would be the best month since just June of this year. And finally, on the shipment side, instead of on the new orders side, we see shipments down 0.1%. And we all know that we have had some problems in that category. We want to continue to monitor what lies ahead, especially considering the word shipments takes on an added dimension considering the strike. Carl, back to you.
So, yeah, a lot of conflicting data there. On the employment side, a little worse than expected. On ISM, a little better than expected. So that's the tough decisions for the Fed, right? They're going to look at a lot of this data. It's going to be conflicting, and then they're going to have to make a move. They're going to make a move in November, likely either 25, 50, okay? I'm not as certain about a 50 for this next move, though. Last one, I felt very confident calling for them to make a 50 move there. This one, I don't feel as confident. I think this one's going to be a coin flip in regards to, do they lower 25 or do they lower 50? Next one up here, calls of the day, Tesla, Eli Lilly, and Bank of America.
So 130 from 115, JP Morgan. They do reiterate, though, Bryn, that it's underweight. They did have their lower than expected deliveries. Dan Ives defending it today.
Gosh.
He's bullish. Outperformed $300.
Raised to 130? Tesla's 240. Oh my gosh. You'll be flipping my flapjacks.
They're lower than expected deliveries. Dan Ives defending it today. He's bullish. Outperformed $300 is the price target. Stock's done a lot lately. It obviously didn't like this number. Maybe it was just a sell on the news because it was up into that. Well, you tell me.
It was up into that.
I mean, I don't know what JP Morgan's talking about. I mean, they're at 115. They raise it to 130. The stock's at 242. So, I mean, I feel like their thesis is a little bit off, or their price targets are off to begin with. I think from a positive perspective, when you look at the car sales that came out, you actually had 6.9% year-over-year growth, which was the first time we had the last 2 quarters, they actually had declining growth. So that's a positive. I think there was whisper numbers that were obviously higher while the stock is sold off. There's 2 big events, though. Obviously, the 10-10 event, which we'll see what happens. To me, I want to hear about the smaller car. We obviously are going to hear about the future of robo-taxis, probably more on Optimus. But I think what's interesting, if you look at the early days of Apple, when their services were so small, no one thought that it would be what it is today. To me, what's also an interesting revenue source is their energy storage. And so their energy storage continues to grow almost 100%, well over.
Yeah, if you're looking for something to be very, very, very bullish on in regards to Tesla, there's really, in my opinion, there's 2 things to be insanely bullish on. Obviously, car deliveries has not been great. We all know that, right? Car average selling prices has not been great. We all know that, right? So, and that's their biggest businesses. So that's why it's been, I think, kind of easy to be more bearish on Tesla for the last, I would say, year or 2, right? But on the flip side, if you want the 2 things to be very bullish on, the energy side of the business has been growing like a weed. Like, it's unbelievable, the growth rates in regards to that business. Very bullish there. And as I've stated for a long, long time, as in years, the services business, right? And I've kept pointing this out, like, it's growing, it keeps growing, it's just going to keep growing much bigger and bigger and bigger with all the vast amount of services. And that's just going to continue to climb for probably decades to go in the future. So I think that's something to be very bullish on for the long term. It's going to give Tesla a lot more stability long term, especially as that services business becomes a Goliath business, which it's going to take still a minimum 5 years to closer to 10 years to really build that into a massive business, the services business. But when it becomes that, Tesla's going to it's going to be able to command software-like valuations on it because people are going to be able to look at those services revenues, going to keep pouring in quarter in, quarter out, regardless of what the economy is doing at the particular time or interest rates or, because who knows where the economy is 5-10 years from now. Who knows where? If I had to say, it was probably better than it is today, right? But we have no clue. Where's interest rates going to be then, right? No clue. So that's going to move around. The amount of cars being sold in a given year, those numbers are going to move around all over the place. But services, that's a business that can be very, very stable for the company, no different than Apple. Apple can have their iPhone units be down. We've seen several quarters recently with Apple where their iPhone units are down, but their business looks great still. Why? Services. If the services business pulls you through, you're looking really dang good. Let's get back into this.
100% year over year. It's only 6% of revenues. And so I think if we can get a smaller car announced and say, when are we going to get delivery dates on the 10-10 meeting, that starts to put more excitement under the name. Because I do think for the stock to get up into the 300s, we need to have just EV growth, right?
Yes,
we just need to have a return to earnings going higher, not lower.
Double digits.
Questions about that, too, more broadly. Let's talk about some stocks on the move. Lilly, weight loss drug, no longer in shortage, according to the FDA. Kevin, you own that stock.
Yeah, I think that's constructive to the company anytime you see something like that happen. But this stock is up so much year to date. How much upside do they still have left in it? I wouldn't be a buyer on that news. I would certainly be a buyer on weakness. And the one thing with GLP that's so interesting is the prospect of it healing other things. We learn each and every day that it's good for this and great for that. And I feel like this is a stock, if you don't own it, you want to add to it and at least get in there on pullbacks. And you probably want to own it for the foreseeable future to see what really comes of this.
This is probably, Josh, more of a question for a B of A shareholder at this point. Not that we haven't exhausted this conversation anyway, but Berkshire's selling more. They're down about 10.2%. Probably want to get, as Santoli was saying earlier today, under 10.
Yeah.
Just what's your view of this whole scenario?
And they've been selling steadily for a long time now, and they're still a larger shareholder, which tells you how much stock they had. It's unclear whether or not they'll get to a 10% and then stop there, or does this go to zero like all of the rest of their exposure? I don't think it's a sign that they think there's something wrong per se with the banking sector. They just might rather be in T-bills, for example, which is half their portfolio at this point, because they don't see materially more upside than 4 to 5%, give or take, from the space, which I suppose is possible.
Insurance they like, maybe in the financial space. Insurance,
no choice but to like insurance.
Well, but they've added. Yes, sure. You of course you could say that, and you're correct. But they've increased their size of, say, Chubb. Yes. Over months. Yes. So it just tells you that where maybe they think the best bets within the financials sector is.
And by the way, don't rule out the possibility they come back. Keep in mind, Berkshire has been in Goldman Sachs and then out. Been in JP Morgan and then out. This is not something that's permanent. And for all we know, there could be a correction in these financial stocks and they get interested again. You have to bear in mind what the backdrop is. These stocks have had a really nice run. They're not cheap on historical standards.
It's up 50% year to date, I think.
Right. It's not like he's blowing it out at the lows. So and it may not even really be him making the decision on his own.
16% year to date.
Yeah, I wouldn't read too much into it as far as it being a signal of anything per se.
So I do have bad news for everybody because he talked about insurance there, and unfortunately I do have bad news to share with everybody in regards to insurance. Bad news. Here it is. Basically, your insurance rates are going to be going up again here over the next 6 months. It's not going to be as big of a move upward as the last move a lot of these insurance companies did, but it is going to be coming. So just something to keep in mind here. Services sector propel economy to soft landing.
Data ahead of tomorrow's key jobs report. It was ISM Services. A lot of headlines here also because the headline showed the fastest services growth in this country since February of last year and a big jump from the prior month. Meanwhile, good news as well for jobless claims, still around 225,000, although that level will soon be affected by Hurricane Helene and the ongoing strikes at the ports and at Boeing. All of that said, stocks are lower today as this October choppiness continues. My next guest is buying the pullbacks, though. Joining us now is Paul Christopher, head of global investment strategy at Wells Fargo Investment Institute. What do you make of the services data, Paul?
Yeah, the economy has been bifurcated for some time. Manufacturing has looked weak. And if you wanted to look for a recession case, that's it. Anyone who depends on bank lending and has had to suffer higher rates. They're really suffering. But the services sectors have done really well for the last couple of years. We think that's going to be the engine that propels this economy to a soft landing and then to a recovery that gathers strength as 25 develops.
The chatter that I'm hearing is that it's too strong. Not that people are doubtful that it's true, but that if it is true, do we have to start worrying about inflation again? And forget soft landing. Do we have to worry that the Fed perhaps doesn't cut at all like what we're expecting right now?
Well, there is a disconnect between the market expecting 2.5 percentage points of rate cuts and others on the street. But look, as the economy slows, and it is slowing, services will go with that. It won't be quite as strong as it is today, and that should help moderate inflation going into next year. What happens into the balance of 25? Yes, you're right. We do think inflation does pick up in the second half of next year amid that cycle, improving. That's why our rate cut forecast is only for 8 instead of the 10 that the market is calling for right now. That's just going to create a little bit of volatility for next year, but it doesn't really prevent us from right now starting to position for that recovery that we think will extend even beyond 25.
Yeah, there's a thing I'm concerned with in regards to inflation. I'm not worried about inflation throughout the end of this year. I've been on record of that many times. I'm not even worried about inflation at the beginning of 2025 either. Back half of 2025, that's when I start to get more concerned about inflation again. And the reason being is, commodities have been the best case scenario you could have ever imagined. Commodities have been for really the past, I would say, year. I don't think that lasts, especially if the Fed keeps cutting interest rates, right? And as long as the economy doesn't completely fall apart, and if you have China coming on stronger next year, which is definitely a possibility with all the stimulus measures they have going through, you could look at oil price going higher, you could look at natural gas price going higher, you could look at commodities in general going higher throughout really even the end of this year, but going really specifically into 2025. And then it'll start to hit the economy and starts to really hit those, let's call it those inflation numbers kind of in the summertime, right? And so, that's something I look at and I'm like, that worries me a little bit as far as next year goes. But it's more of a, in my opinion, kind of second half story than first half story.
What's interesting to me is that as someone who thinks inflation could prove sticky, you still prefer large caps over small ones. Dan Suzuki also thinks inflation will be sticky, prefers small caps over large ones. Why do you think that that kind of macro is not one that would necessarily favor the Russell 2000?
Sticky is sort of a sticky word. If you think about 2.5% inflation, that's plenty enough for the Fed to continue cutting rates. If inflation were to stick around 3 or 3.5, that would be more serious, and then we'd be more concerned about small caps. But we're positioning right now. We're underweight small caps relative to large, but we're at strategic levels. In other words, we want investors to be at their long-term goals for small caps, getting ready for a recovery that we think will develop more quickly and more strongly, more forcefully than inflation.
I just logged into my Fidelity because I wanted to see if Meta hit $1 million position. I've never had a $1 million position in one portfolio. Never. This would be my first time I ever had $1 million position in a portfolio that I remember at least. And so Meta, $990,000, $990,709 to be exact, in the public account right now. So, it's so close. If tomorrow can just be a somewhat decent day for Meta stock, it'll be $1 million position, which would be very exciting.
Well, and that's going to be, and it's typically a good environment for small caps. So we don't want to be underweight small caps here. You want to be at your strategic long-term goals.
Okay, so you're also looking at communication services, industrials, financials, materials, energy. That's kind of a very broad way to look at things. But if you had to boil it down, where would you say that you see the most opportunity for alpha relative to the consensus, either in specific stocks or sectors?
Yeah, because our view on inflation is maybe a little bit more sanguine than others going into the year, we would position more cyclically. In other words, position for the economy to recover early in 2025. Expect that to be the main story, and that explains the predominance of cyclical sectors, or that is sectors that should do well as the economy begins to recover. So industrials, materials, right, energy, and financials all should do well as the economy starts to recover.
Yeah, and then finally on Mag 7, and technology in general here, what do you do?
Yeah, technology has looked expensive to us for a while. We need to see much more of a pullback. We might get that considering all of the uncertainties that are swirling right now, the Middle East, you mentioned earlier, the strikes, the weather, the Hurricane Helene, and the damage that it did in the southeastern part of the country. Now, those are all going to register some kind of hits, either to higher oil prices or to the economy directly. Then you've got the uncertainties around the election. There's always uncertainty around election time. And so on those sorts of pullbacks, a 5 to 7% pullback here would not be unusual. That might provide a good opportunity to buy those Mag 7, that information technology sector, at a more attractive price.
I see. All right. Sounds good. We'll see what the next few weeks bring. Paul, thanks for your time.
All right,
All right, and the last one up here, these brands could be hit the hardest by the port strike.
Peter, but perhaps this offers them an opportunity to regain some market share.
Yeah, thanks, Kelly, for having me. I think it's probably on the margin for Lamb Weston, but one of the things, that we do recognize is, particularly on the East Coast, we source a lot of French fries from Europe. And so to the extent that those get backed up, maybe that helps some of the capacity problems that have, been an issue for the French fry industry in the U.S., just tighten some of that up.
You also think McCormick should be somewhat insulated?
Yeah, so the company reported earlier this week and actually talked a bit about this. They've been planning for months and actually used some of their working capital to build up inventory of raw materials.
McCormick, by the way, is a spice company.
So a lot of the spices that they source from around the globe, they were able to kind of buy ahead of time and plan in the event that this becomes an elongated strike.
Included in some of your companies that could face losses are some really interesting data points that make me rethink my Costco order this morning. Anecdotally, my New Jersey Costco was already out of paper towels, which I was not buying because of the port strike, just because I thought they'd be useful, and they were gone. But I'm glad that I bought that Rao's sauce, because you think those imports could be affected, and that would, of course, be a problem for Campbell's.
Yeah, so this was Rao's was a brand that Campbell's acquired earlier this year. Part of the authenticity of the brand around Rao's, again, is that it's made in Italy and it's imported from Italy. Even some of the production assets that Campbell's has in the...
So they're saying Elf's going to be hit negatively by this. I'm going to have to look more into exactly where everything comes from Elf, because a lot of Elf products come from China. And so I was under the assumption that there's a decent amount would come through the LA ports, but maybe not. I'll have to do some more digging on that.
The U.S. to help produce Rao's, they actually need to source the tomatoes, the olive oil from Italy to keep the authenticity of the brand.
But you know what's interesting about that is, as a long-term investor, who cares? Like, okay, the port strike lasts a month, whatever, okay? And Elf doesn't make as much money as they could. Big deal. Big deal. We'll make it through. We'll be okay. And it'll just give us easier comps to comp against next year.
Again, to the extent that this is elongated and they haven't built up necessarily a ton of inventory ahead of...
Everybody gets so tied up in the short-term stuff, and it's like, come on, man. This will pass, and we'll move on, and it'll be the next thing.
That's where you could potentially see an issue. But again, nothing really that we're expecting in the near term.
Bananas are another one that gets mentioned. And by the way, how do people figure out exactly what's going through these ports? You have this granular, down to... In Dole's case, by the way, that would be 40% of their U.S. sales exposure if there is a hiccup there.
Yeah, so take a company, you mentioned before the break, like Smucker's, who sources, coffee through New Orleans. It's actually where their big roastery plant is for Folgers. So, we have that level of detail going through a number of these companies. I think the other ones that we really kind of call out as potentially having issues, again, to the extent this keeps going on, some of the chicken companies who export, a decent amount of chicken out of the U.S., you don't want to get stuck in a situation where you have a perishable product that needs to go out and you don't have a home for it.
That's a great point, because if our exports are affected, you can imagine those industries screaming, not to mention the consumers who want products, but also the industries trying to get things like chicken to other markets. Keurig Dr. Pepper, their second biggest beverage plant is in Ireland. So it's almost like I can think of people listening to this and thinking about what they actually need to stock up on. Are we really going to expect disruptions? What's the length of the strike, at which point you think, people might seriously need to think about stockpiling?
So, our transportation team here at B of A is expecting that this gets resolved in the coming days or weeks. And so, want to rely on their expertise on that matter. There's some redundancy in the capacity that these companies have in terms of sourcing ingredients. For Keurig Dr. Pepper, it might be ingredients for some of their soft drink businesses, but they do have assets here domestically to still help them produce.
All right, then quickly, Brown-Forman, ELF, or ELF Cosmetics. Why do those also come up on your list?
Yeah, so for Brown-Forman, it's 40 to 45% of the sales. So these are brands like Woodford Reserve and Jack Daniels that are being exported out of the U.S. specifically to Europe. And so that has a potential, again, to the extent this goes on, to kind of cramp sales. Anything going to Asia or other markets is probably okay, but the European piece of the business, could see a bit of a challenge. In terms of ELF, look, they source a lot of their product from China. Some of it, again, comes in through the West Coast ports, so that should be okay. But to the extent, again, that they're sourcing any materials or any raw, any product through the East Coast, it's really going to make a big difference for these companies.
Yeah. Are paper towels actually going to be at risk here?
Okay, so exactly what I thought. Okay, yeah, like ELF should be coming through West Coast mainly. And so even him, it sounded like he was very uncertain if ELF's even going to really be that negatively affected by this. Was he not? Was he not a little uncertain there?
Coast ports, so that should be okay. But to the extent, again, European piece of the business, could see a bit of a challenge. In terms of ELF, look, they source a lot of their product from China. Some of it, again, comes in through the West Coast ports, so that should be okay. But to the extent, again, that they're sourcing, any materials or any raw, any product through the East Coast, it's really going to make a big difference for these companies.
Yeah. Are paper towels actually going to be at risk here? Do we make paper towels in this country? Can't we get them from the West Coast?
We do.
We
do make paper towels here.
All right.
Yes, and the toilet paper,
Peter,
believe
thanks.
it or not.
Appreciate your time today.
Yeah, so ELF, honestly, I don't think they're going to be super negatively affected by this whole port situation. And if they are a little bit, who cares? Like, you got to focus on long term, because this short term stuff is here today, gone tomorrow. Everybody's talking about port strikes. Give it a little time. People are going to forget it ever even happened, okay? All right, guys, appreciate you joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Additionally, if you're looking to join my private stock group, get access to 1000xstocks.com, the software, all those sorts of things, you can click the pinned comment down there, fill out a form, and we'll see if we can get you access to that next week. Much love, and have a great day.